What up, traders? What up, investors? Today has been a tremendously crazy selling, and the bears came out in full bear stance and just really annihilated a lot of the market. And again, we're broke past some previous support. In this video, what we're going to be going into is breaking down, really particular, the Nasdaq and looking at some potential resistance and support levels, maybe giving some focus and mindset on the sense of just trading philosophy, planning your trades, and then at the same time having really putting that all in the cauldron of trading and the crazy world of investing, and just kind of creating an atmosphere or a better roadmap, as some people say, to kind of help potentially avoid chop, uh, cut back on chop, and there's other different things that we can do with a choppy market like this. So the first and foremost, I want to, a lot of people have messaged me and asked on what am I doing during these kind of market trials, and especially in my personal accounts, I'm not doing much of anything. I'm really being mindful on looking at the chop. Again, we're going to be discussing that via the charts, but especially looking at the Nasdaq, and then at the same time, just cutting anything that was maybe short dated completely out. And you have to have a plan for, again, you're going to hear the word plan, structure, rules quite a bit. Um, Again, I know how a lot of people are feeling right now on a down day like this, and your portfolio is heavily weighted on growth stocks, and you have positions that are like 30-40% of the account, and they're all down well over 20-30% in the last week or so. Trust me, I've been there. I know the pain. It's actually, it's a terrible feeling on having that like that. Not saying I'm here to give you shiny, delicious chocolate chip cookies and roses and maybe a cup of milk, maybe to give you some kind of candid advice to kind of see on, like, hey, the market is the market, and the market doesn't always go up. So things do happen in the market that could create a turmoil. But with this chop, it's really difficult on just being able to buy the dip bro kind of scenarios. And I'm seeing that quite a bit, be the philosophy of everyone just like, oh, buy the dip, buy the dip, buy the dip. But you have to be very careful when you're telling people to buy the dip. What do you mean buy the dip? You mean to buy the dip at this level? You mean to buy the dip at that level? Like, it's very loose term in the sense of buying the dip kind of scenario. With that being said, and having that understanding here, I want to kind of look at some things that you can do. Again, it might be a little bit too late for some folks on looking at potentially alternatives here, but it's just a cutback size, not to be in the market. Again, you can cash out, right? Again, you don't have to, yeah, you might feel some pain and take a loss there, but the real rule that you're seeing have to come through is basically you have to preserve the capital. And right now, your base, let's just configure it like you have a your fortress. Your fortress, your trading account, your brokerage account is a fortress, and you have an invading army, aka the bears, coming to take your gold that you have worked so hard to gather, slowly build up the last year, ever since the pandemic bottom. And you're just kind of want to be careful with that. But once a couple bears get in and get a couple gold bricks or get a couple little bit of your capital, the fear kind of kicks in, and then you start making different bets that you should probably not make, and then you kind of go down the rabbit hole and just figuring out in the sense of what am I doing here kind of scenario. Like, I'm a worst trader in the world. I'm the dumbest investor. Blah 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 blah. And then your mind, the little reptilian brain in your head, it starts giving that negativity and getting in that toxicity into your thoughts. And I'm again, I am. This is just for educate. This is not for educational purposes. This is just for entertainment. I'm not a doctor of any kind, or psychologist, or a shrink, or anything of those demographics. This is just from the school of hard knocks, ladies and gentlemen. This is just straight hard knocks, real talk kind of scenario here. And really just kind of laying down, again, I've been down this red road before, and previous years. It was completely terrible, and just you have to have a very much a trading plan. And again, if a trading plan means just kind of keeping things in your back of your head, I don't know many people that have the brain power to do that. It's always best to have a notebook, an iPad, or whatever you do to track things to keep yourself in the market and keep yourself relevant. So even the most basic things, when I come in the morning, I write down what kind of mood I'm in. Am I didn't I woke up right to the bed? Was my coffee a little too weak? Did I add not I didn't I only added one scoop, not two scoops? How did I feel last night? Am I everything okay in the Ken household? Is the kid sick? All these kind of small mental things will just peck at your head when you're trying to make these trading strategies and just trading overall. Like trading the charts, pretty simplistic. We know the lines, we know things like that. But the problem that a lot of people don't discuss and look at is the psychology behind it. And again, I'm not trying to get all hippy dippy here, but the sense of just you have to understand the emotions when it comes to trading. And we are all humans here. I'm not a cyborg quite yet. The human aspect is a very large aspect of the trading philosophies, and looking at what is triggering you. Is there some kind of other you're trying to reach this, like I'm trying to make $1,000 a day. I'm just trying to make $1,000 a week. I'm trying to make $1,000 a month. You're trying to set these goals up, and these goals are actually maybe not the most acute or accurate to what you're looking for. You're seeing some other YouTubers or other people that you know within your circle of trading that are making gangbusters money, and then you're over here just collecting a couple potato chips. It's you have to kind of compare it between your chapter one or whatever chapter you're on into whatever chapter they on. They're different books of trading, and again, so I'm making a lot of um, metaphors here for trading. Again, I think it's the best way to kind of explain things. I'm not the biggest sports guy, so I'm not going to be talking about football and baseball, things like that. But a person who's batting 300 is doing pretty well in the MLB, or in overall in baseball. Uh, at the same time, if you're only hitting 30% of the times of your shots in basketball, that's like terrible. Like it's you can't compare basketball to baseball percentages and so forth. Like, you have to look at it a finite of categories in the sense. I'm just going down a rabbit hole, but in the sense of having your expectations be met that are realistic. With that being said, I want to be open, and if people need someone to bounce ideas off, or they're not feeling really great, please do not hesitate. You don't have to be a member or whatever to ping me. You're Everyone who's on the Discord can message me, and I'll try to get back to you in a reasonable time frame and be very straight and honest with you and candid at times. Because again, I've been there. I've been there. I felt this pain. Not saying it's like the dating game of like, hey, there's plenty of fish in the sea. Let's go get them. It's more or less in the sense of not to have someone that can understand the scenarios you're going through, and maybe try just a little bit to try to kind of see the little bit of the light at the end of the tunnel. So, on that note, that's basically my spiel about that. I do want to talk about the overall market as well, so we can kind of just jump into the NASDAQ here. We're actually going to detach this real fast. So, we're going to be looking at the NASDAQ. Of course, this is the futures market here. Very much coming down here to, again, currently down as we speak a little bit at 9 p.m. tonight. It's around just down 40 points, so about 0.32%. So again, we broke into all-time lows. So we actually slightly broke to what we saw just a couple days ago, which we saw in the pre-market. I believe that was Friday. We saw that really low here coming in here. We broke that outside of the market trading hours, but we're seeing that kind of breakthrough here as well. So what does this mean? Could Could we get a market rally tomorrow? Sure, why not? Again, the thing is too is like I'm not going to be jumping out here and telling you that everything's going to be hunky dory and everything is just let's just go and buy the dip, bros, kind of scenario. This there has been damage done to the market. We are very much in chop mode. So chop mode, what I mean by chop mode is this like sideways action. Like we're really not going anywhere. Okay, we're not going anywhere. Actually, just today we're actually going lower. So keep that in mind as well. Basically, ever since the 23rd, which was the Friday or Thursday, we're coming in here on the 23rd. Go up, please. Thank you. The 23rd. So about about a week ago, we've just seen this kind of chop coming here, and especially with that Friday market low here, everyone's like, oh, it's the bottom. It's the 89 EMA. We've talked about it within the Discord about that 89 EMA to potentially trying to hold. So that is something that we were planning to see to try to hold. But guess what? That plan has not worked out. So guess what? We tear that plan out and we go to the next phase or the next protocol. So the next protocol is okay. So if it can stay in around that 89 EMA, it has a chance to potentially try to break up tomorrow and close above the 89 EMA. But if it continues to go lower here, we do have some Fibonacci numbers to kind of potentially to bounce some ideas off. This might make a little bit more sense if we look at the QQQ. So let's look at the QQQs. I recently talked about, again, that basically that 309 range, the 310 range, to potentially be that level of support. Clearly, we have not seen that has held there. Again, we were down almost well over 3% nearly just today. So that's a lot of selling going on there. Very large push down. The moving averages are very much spaghetti together. We have the 5 and 8 moving averages below the 21 EMA. We are well below the 50 SMA as well. So that is that little red teal line that we're seeing kind of printed through here. We have not been able to get above that. We did talk about just a couple days ago of trying to get back above the 21 EMA, but we did not. So that is a potential, whatever you want to call it, if that's a bear trap, if that's just a failed retracement, what do you want to put to it? It just wasn't able to get past that momentum there at the 21 EMA. And then, of course, once that kind of failed, we just kind of got that swoop lower. Then the next initial level was the 89 EMA. And if the selling continues coming in tomorrow or to the end of the week, which I want to highlight as well, is that we have the non-farm payroll numbers coming out at 8:30 Eastern Standard Time on Friday. So that's all the numbers based about unemployment. That's going to definitely be a potential driver if we do see less unemployment. I mean, there could be more growth in the market, more people getting jobs, unemployment's lower. That could even potentially spook up the interest rate folks and the yield curve folks to potentially jump the market even lower. Very much so. It's kind of like a I don't know kind of scenario of what could happen. It's just very much so of like trade smaller, like we talked about, be out of the market and just kind of wait for your setups. Because as of right now, we're just kind of in this market turmoil kind of scenario. The next level we potentially could be looking for the NASDAQ or QQQ would be around that 3,300. Sorry, 303. So they're on that 3,000-ish range. Sorry, that 3,000 range. The QQQ is only 100. So the 300 range here, so 303.68. So where does that line up? That was a potential level that we saw hit multiple times. Let me actually get this out so I can kind of highlight this epic pen here. There we go. So I can kind of better highlight things that I want to show you here. Why is it taking forever to load? There it goes. Okay, so we're going to be using this, and we're going to make it red. Okay, so we're actually going to make it green because we want the market gods to listen to us. So the 89 EMA we were looking at right here, this line right here, basically came through, and as of right now, it is not held. If you're a pure technical analysis folks, you're like, okay, that failed. I'm a little bit more loosey-goosey kind of scenario. That could be a potential hold, but it doesn't look too pretty. Because again, I'm more scared of seeing this very large red candle here more than anything. At the same time, what next level could we see? We're going to be looking at that 303 level. Again, where does that come from? That was its previous market swing high to low here, which we saw that was in the end of August, that we had that very strong market down pull that basically lasted well over a month. It felt like a month, but it was really just like uh, really compressed, like 2.5, 3 weeks kind of time frame, and then we kind of had some chop going in through there. Um, so that is basically, but at that point, we hit the 89 EMA here and here twice. Right now, we didn't hit it the first time. This potentially could be the first bounce if we do get a stronger pullback. But again, very more highlighting that very large red candle here. Um, at the same time, we had that market kind of come back and then another pullback come in, but we've had that 89 EMA kind of come into support again. Again, highlighting that as well. With that, highlighting this, the 100% move or that previous breakout or high that we saw back of last year is going to be potential resistance to the downside. That's going to be that 303 level we potentially could see. And sadly, if that level does not hold, we're going to be looking for something a little bit further down to around that 300 range on the QQQs. So that's going to be a very extreme selling coming through here. If we do see that in the next days or week. Um, Again, I have no idea. I have no crystal ball here. You don't see crystal ball behind me. You don't see it on my desk. You just see my fantastic coffee mugs and my water, my H2O over here, and then of course my handy dandy miracle stuffies here. I have my little stuffy here that I'm like my little cow. It's a bull, but I call it my bull. He better start coming in today. So all the joking aside, I know it's been a very rough couple days for a lot of folks. I hope that you find some kind of solace in the sense of some of the examples that could be candidates of the very large pullback in individuals' accounts. And just it's okay to be afraid, but just have a plan when you're afraid or you're just not knowing. Like, just don't just trade because other folks are telling you to, or you feel like left out. Like, then you start letting outside sources capitulate your trading plan. Um, I've dealt that for years, and I still deal with it on a daily basis. On, hey, I just saw a good trader that I know put these trades on, but I don't quite understand it, but maybe I should do it. No, you got to trade your plan, and it really just comes into knowing your personal self. And trading and investing will definitely get to know your personal self pretty fast. So, key takeaways. We've kind of been rambling here for about 20 minutes or so. In the QQQ, we're going to be potentially looking, if it does not hold around that 309 to 310 range, to potentially come down to that 303. Do I want that? No, but the market doesn't care what I want. If that 303 doesn't hold, we could be breaking past 300 to around that 300 even to around 294. That's going to be coming into the 144 EMA, which is this green line here that I just highlighted with this magenta red. I think it's magenta. I'm colorblind. On that note, so that's going to be basically looking for what we could look for, which I would love to see, is to kind of close for the week above 309 to 310. So coming into matter no what happens tomorrow on Thursday or what happens on Friday, I would love to see the QQQs try to stay above 309 towards the end of the week. If it doesn't, we have to look at again, looking at these other levels, the 303 to 295-ish kind of range to potentially hold. At the same note, where we could see, if we do get a strong bounce back, if the Fed comes in and just gives everyone free money, or somehow the yield curves don't go up and people just get more optimistic in the market, and whatever the catalyst could be, I don't know. Warren Buffett can go on CNBC and give a nice little speech, whatever, and kind of get the boys back in, or the pep back in the step of the bull here. But we can see here that the 21 EMA, that falling 21 EMA, which is this yellow line right here, is going to be the potential levels of resistance on the way up. So if we do get a bounce back here, we're going to be looking for to try to break above 317 or 315.44, and then potentially try to test that 320 to 322 at those levels that up there. Whew. Again, guys, ladies and gentlemen, I know it's been a rough week. Again, please don't hesitate. I will try my very best to kind of give a very candid and very not empathetic, some kind of reasoning if you need help. I do know it's a really tough times. You can hit me up on Twitter, you can hit me up on Discord, you can comment on the video, whatever. I'll try my very best to get back and kind of give some a better understanding what could be going on, and maybe some highlighting on where you could have potentially change things, look at things, and basically take this as a learning lesson as well. So, ladies and gentlemen, thank you so very much for listening to this very long-winded video from this guy. Please be safe out there, and I'll catch you guys on the flip side.